All right, finally, hey everybody. Sorry about being late. The I use some software tools to do everything, and when I clicked the button to, I guess it was I made the list, I copied the list. I was about to paste it into the browser and paste the other information into Discord. I went to grab the what do you call it, thumbnail, I guess, for the video with the melting ice cream dudes, and when I saved that out of Midjourney, which is the interfaces through Discord. When I saved it, it crashed the web browser and Python and Discord, and like it just chain reaction closed everything. It took me like 10 minutes to get it all back up and everything pasted back together. God, what a frustrating moment to do that. And then I got it all back together. So finally, I'm here. But the list is not very long today, so a little bit like watching paint dry today. So far, jumping over here, looking at the S&P, we're just stuck right at the roadmap line on the daily, right in there. We're going to have to get through all of this resistance above us to go higher. Simple as that. All right, it's not. Oh, that was cool. I don't know what just happened. There we go. So back to the screen. I don't even know what's going on today. One of those days. It's probably gonna be that day. It's probably gonna be on Monday all day long. Oh, cool. My phone's not muted either. Let's see what's going on with the phone. Not connected to Bluetooth. Cool. All right. Mute it. All right. Technology, not my friend this morning. And that's kind of funny because that's what I do, right? So all trading involves a substantial risk of loss, past performance, not necessarily indicative of future results. This presentation is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument. If you desire personal financial advice, hire a consultant financial advisor, which is not me. I don't do that. Most financial advisors out there, they're just looking to make some of your money and some of their money. Got to make sure you trust them. And if you're like, well, JT, you're better than a financial advisor, be careful. That's not my job, all right? My job is not to take into consideration your financial well-being. Be careful. Anything I talk about may not be right for you and your financial situation. And just because I make predictions, they come true often enough, the next prediction I make may not come true, and I may never get another one right again. All trading involves a substantial risk of loss. So when you get into anything I talk about, you may lose your money. All right, that's basically what that all means in case you've never thought about it. I'm not sure we're going to make much moves. I mean, tomorrow we've got GDP. That could be market moving. Could be. I'm not sure we will, but that could be right there. We've got PCE on Friday. That could be market moving, depending on how it comes out. We could just sit here and watch paint dry right at this resistance. I don't look forward to just sitting here at the resistance, but it could be what we do. All right, that's golly, just rough. I mean, we've got all sorts of things working against us. We've got the I didn't show this yesterday. Corporate buyback blackout period ramping up into that for the next month here. So I think I drew it. Yeah, I pulled it up right here. So we're like hanging right in here, and over the next week or so, we're gonna be down here, get a little pop, and then we'll plummet down here as we get on into April. And then very quickly we launch off as most of the S&P 500 companies report. That'll be the big earnings week right there. 420, that week of 425 pretty much. And then it frees everybody up to be able to trade again. But then we go through a period and then it's a cycle. It's the quarterly cycle every time. So as we get to the end of June, we'll be back in it again. And look at this. This is like record amounts of corporate buybacks. This is one we already had. Didn't really help the market go higher so much. Here's one we're going to have. Here's one we're going to have. These are projected, but likely to play out because everybody's got crap tons of money and we need to do buybacks and we're going to keep announcing them. And part of these are scheduled buybacks that were already pre-announced by companies that reported earnings. As we drop in here, typically we slow things down a little bit, but that doesn't mean that we can't pop the market on through the resistance. A couple things we're waiting on. Into the quarter. That happens in what? 5 days? Monday? Into the quarter? In case you didn't already like quarter of the way through 2025. Holy moly. It's right there on Monday. That's Tuesday's a new quarter. Wednesday has Trump's tariff situation, which seems to be about as slippery as a greased pig. I mean, the thing just, he's all over the place with what's happening next. I don't know. I mean, it's like, oh, we're gonna tariff people that tariff us. Oh, well, maybe we won't tariff everybody. Maybe we're gonna tariff China. Well, maybe we'll take it easy on some of the stuff from China. I mean, it's an elusive thing to pin down. And as I talked about last Monday, I don't know if it matters that much. I mean, they're a protectionist thing. We slap tariffs on people. People slap tariffs on us. There's a lot of rhetoric out there that most people won't be able to go, most countries won't be able to go tit for tat with the United States. Why? Because we're a $3 trillion economy. As far as the worldwide, I should say not economy, but $3 trillion marketplace for international goods. We typically import about $3 trillion worth of international goods every year. If you don't want to sell stuff to the United States, cool. But where are you going to go? Who else are you going to take your goods to and sell them if you don't sell them here? There's no other economy that's nearly as big as the United States. No other consumers out there that are going to replace that. So, gotta be careful. Gotta be careful. All right. Matters for jobs. I'm not sure which one you mean, which thing I said. I had the chat covered up there for a few minutes. So this is the resistance. Trying to push through. We've got weak consumers. Well, that comes back to the thumbnail I had for today. Let me see if I can pull up some. I shared an image in Discord yesterday. That was pretty rough. Let me see if I can pull this over here. Look at this right here. Household equity wealth set to fall $3 trillion. Remember what I just said about the global marketplace being $3 trillion? That's a year's worth of the global marketplace dropping out. Right there, just Q1 with the stock pullbacks that we got. That's U.S. household and Bank of America private client equity holdings. Q over Q, quarter over quarter change is negative $3 trillion. Whew. Think about that a minute. Wrap your head around that. That's a big number. Big number right there. And this is another interesting chart right here. These are all the stocks, I guess you might say. Q4 2024 comps and margins versus fiscal year earnings per share guidance versus consensus. So this is like companies are revising down essentially. You don't have very many on this list revising up. And you can see the tickers over here: AAP, ASO, AZO, BBWI, BBY, BJ. I mean, these are basically retail. Williams-Sonoma, Walmart, Ulta, Target, O'Reilly's, Ollie's. Can't remember those. Lowe's, Home Depot, Floor and Decor, Five Below, Foot Locker, Dick's Sporting Goods, Dollar General, Costco, BJ's Warehouse, Best Buy, Academy Sports and Outdoors, AutoZone. Not super strong here if the retail is all revising down, right? That's consumers. I mean, even Walmart down here. They were super strong because the higher end consumers were trading down and they were getting more business because that higher end consumer could get more bang for their buck. So they were buying more stuff at Walmart. Walmart making more money. But now that effect is eroding off of the projections when you look at the whole fiscal year 2025. So this doesn't make us money today. But when you look down the rest of the year, could be a problem. All right. Usually earnings per share peak after the stock market peaks. The stock market will usually peak 3 to 6 months ahead of earnings per shares peaking out in the S&P. I don't have numbers for price to sales because nobody really tracks it but me, as far as, it's just not widely used, even though it's a much better number. Because you can't fake sales. You can fake earnings. You can screw with the numbers. Everybody loves to report, earnings per share, but it's really price to sales. It's where the rubber meets the road. And of course, there's a lot of costs and stuff that go into the difference between, your earnings per share could be negative while your price to sales is positive. There's a lot of things that go into, there's a lot of costs of doing business that go into the earnings number. But you can shift things, quarters, and, you pull forward things and push them out things and book revenue here and there. And there's all sorts of little games they play with the earnings numbers. If you've not paid attention to earnings before, that's why it's extremely difficult to try to predict any kind of move off of earnings, because it's like, whose line is it anyway? The numbers don't matter, and it's all made up. So, but price to sales, they have to book the sales when they put them on the books, and then they have to claim them that quarter. So price to sales is a more honest number because they either got the sales in that quarter or they didn't. And this forward guidance for earnings per share, some of these companies are probably sandbagging, but some of them are kind of hurting a little bit. Costco's been ripping for years, and now we're starting to be flat on Costco. Walmart and BJ's, those are the three big warehouse companies in the United States, really. It's kind of interesting. That's the peak epitome of consumerism right there. You go in one of those warehouse stores, buy in bulk, buy more than you could ever use. It's like, look at this. I can buy, 600 pounds of cat food in a bag. So what that the cat eats 3 ounces of cat food a day? Lifetime supply. Anyway, moving on. There's some other graphs in there, but without having to explain a lot more, I guess this one's good too. Charge-offs. These are loan charge-offs. Usually we like to hang out at 3%, 3 to 4%. Loan charge-offs spiking. Look at this. We're higher than we were. I wish we had 2008. I think it dwarfs this right now. Loan charge-offs, I think, spiked to 15% in 2007-8. This is climbing. The rates higher than we've had since 2012. And they're Capital One and Discover Financial right there. Not too good. Not too good. Anyway. Yeah, for anybody that's seen Idiocracy, welcome to Costco. I love you. And so talking about Costco came back to the roadmap line for the first time in a long time. It's 2023. Back here, we were in kind of a watermelon seed squeeze, and we popped up, ripping, and now first sign of weakness we've had in like 2 years. Walmart. I mean, that's just been a absolute tear there when consumers started trading down. But that too came to an end. It looks like now we're seeing rocky road ahead. Other stuff, AZO, still working at higher, even though they expect. Here's the thing: people that they stop buying new cars and keep their cars longer. But when you keep your car longer, you got to buy parts. At least if you have a gas-powered car. Buying parts, good for AutoZone, good for O'Reilly. Got to keep those cars on the road. They doing a 15 for 1 stock split out here. But other stuff, like you would think, oops, I hit the wrong. Dollar General, you would think, yeah, the consumers, like this really is a story of the lower end consumer here. Not doing too good. They were doing good over here. They were buying more and more. Now all of a sudden the lower end, really pulling back on their spending. And here's another chart to demonstrate the higher end. Usually, I mean, Target and Walmart sell a lot of the same sort of stuff, not exactly the same stuff, but you're seeing that higher end consumer that would shop at Target over Walmart not really recovering. Concerning trend going on here, especially when the U.S. markets and economy is really based around consumerism. I mean, all jokes aside, really buying stuff and servicing it is kind of what drives our economy. If we stop buying stuff, it starts hurting. And this kind of demonstrates too, this is home builders and supplies. We peaked out right here, building and buying new houses and then filling them with stuff. It's like a danger level here. We might take a crack back out. To zoom this one out. It doesn't go back to 2008. Look at one. It does. Right here. See what happened back here? Is a home builder. We've been on a nice big tear. This might be set up for another larger retrace here. That high, that low. Look at where we stop. I mean, it's not magic. 1618. And we might take a retrace. Could retest the breakout once again, back down at 50. And look where the monthly roadmap line just happens to be sitting. Right down there at the 1272. Around that 75 area. It's not magic. It's all like once I figured out the real way to do fibs and and Elliott wave and stuff like that. It's like a light bulb how this stuff started magically coming together. It's wild. Anyway, so what's moving today? That's why most of you are here, right? At least the ones that are still here. S&P 500 stuck at the roadmap line. I've been speculating this week that maybe we can push on through, get up to this target area, do a pullback, retest this daily roadmap line, bounce here, go on up, have to pull it over, come up here, possibly push on through into late summer. May do a pullback or 2 or 3 pushes on up here, early fall, mid fall, maybe. And that might be the top right up in here. Could go faster. We could see this go faster and more exponential. It's entirely possible we don't even slow down. We just go up here and then pop. That's possible. I don't think we go that fast, but the market can do whatever it wants to do. I don't know what the news would be to cause that. Now, something's brewing, though, up here that, I don't know, whether it be war or I can't put it all together. Some kind of financial crisis, some sort of something. I think we're going to have a problem if and when we get right up in this. It could be this zone, could be a little bigger. Once we get above here, it's like you need to set the sails for a bigger correction. I'm looking big picture right now because we're so close to the finish line at this point. And if you're new here, you've not heard me talk about this before, this is the S&P 500 futures. All right, I use this because the cash index closes at the close of the market and doesn't move again until the open of the market. This one moves all night. And I expect us to go below 4,000 before we go above 7,000. We might be set up for a greater depression type event. So there's the overnight action, just sideways, real muted. Not many stocks on our list today. NASDAQ came back to test the 15-minute roadmap line. This is big tech. Glancing off. Let's see, we poked into the daily and we're kind of glancing off there. Retracing it back out. I'd love to see this push on through, just like the S&P 500. Russell still consolidating down here. We've got a ways to go up to the daily roadmap line. These two are already there. This one way behind. I kind of expect this one to catch up, and then we probably do a retrace. Then we poke on through and get up into that resistance zone I've been talking about for a while. Up here around 2300, 2330 on the Russell. Oil keeps attempting to push on higher, watching for this to interact with the daily roadmap line. If we get above it, we're likely to go on up to 80. I'm not sure this downtrend of highs is going to matter since we softened it up back here in January. If you think about it, we were at 80 on oil back in January, and we took a trip all the way down to 65. Now we're ramping it back up. And remember, drill baby drill is not bullish for oil prices. Increased supply is lower prices. That's the whole point of drill baby drill. But drill baby drill requires on prices up here. You can't do oil projects unless we go visit the 80s, and you can sell some futures. That's the beauty. If you're actually a producer of oil, you can sell futures, lock in your price, and even if it drops again, you still got your $80 oil right there. It's kind of arbitrage type thing against real life prices. Now, if oil kept skyrocketing, you'd be kind of screwed, but that at least gives you the opportunity to lock in a price that you need to make your project work. GC, just sitting. As I talked about yesterday, it has an opportunity to squeak on out with the fifth wave move. 1, 2, 3. This could consolidate for a few days before we pop. somewhere in that 3085, possibly 3100 area, likely where we top out. Bitcoin sitting, it's not really evident on the futures chart as much as it is the spot market charts. We're stuck at the daily roadmap line trying to push through. Got the downtrend of highs. It's like a confluence zone right here. Everything kind of came together, provide a super strong resistance, get through. If we can, probably rally on up here, maybe test the 98,000 area, maybe come back, retest that daily roadmap line before we bust on through. That would be my, if I was going to put like an odds on it, maybe 65% likely to occur this way. And maybe, whatever's left, 35% likely to do something else, which might be just bust on through or reject down. This is if we're going to go up here. So if we reject, don't hold the roadmap line, we're going on down. Probably going to test the high from last March around that 74,000 area. Don't want to see that. Not at all. Ethereum right here, just consolidating. And we had this big drop over here. And we're just consolidating underneath it. We've got the big downtrend of highs, even kind of bigger and faster. And then the roadmap line way up there on the daily. It's going to take a lot of effort. Like we were riding this trend line, then we accelerated to something worse. And we're breaking through the worst downtrend. If you look at this, the worst downtrend here, we're down high, 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 poking through that one. So this is the initial sign that we might be able to recover. Got resistance here. Got resistance here. Got resistance here. And then we've got the 618 level probably right there. Let's draw it. Got this high. We've got this low. Yep. A little low, slightly lower. Right there. Doesn't look like a logical place, which is concerning to me. Usually it sits at a very logical place, but I guess it's right in between that consolidation and that consolidation. So we'll see. We'll see on Ethereum. Moving on, NKD. It got back in the box. Just sitting here, though. Not really showing any enthusiasm. Love to break through the daily roadmap line and get back to the top of the box at 40,400. If we can do that, we have potential to break on out and head higher. And that would probably be an indication that global liquidity is on the rise again and maybe take us on up to some of these higher targets at 44,000, maybe even up to 53,000. And everything, I mean, if we break out of the top of the box, it's likely we're going on the big up scenario that I was talking about, possibly out to October even. We find ourselves up here with the S&P up there and the NASDAQ up there and the Russell at the resistance zone. This is like the biggest danger sign I've seen in the market in a long time. So if all these things kind of play out together, it's gonna be like the perfect storm. I can see the storm clouds are brewing. When all that happens, if it all happens at the same time, it's like the tornado sirens are going off. We gotta take cover. This right here may result in a pop back to the roadmap line right there. Wouldn't surprise me one bit. See a 105.50. Then we'll see what happens. If we break through, we might be able to go on up and make a new high, like a 111. Could come all the way back up here again. Break through. If we glance off, we're probably coming right down here. Big picture, we're going down eventually. I just don't know if we need another higher high than we had in January, but lower high than we had back in 22. I don't know which way we're going with it right now. Some people say when the dollar rises, the market drops, but from August last year through January, the market was up and the dollar was up. That doesn't make any sense. So only correlated when they're correlated. They're not when they're not. And be careful. Always be careful. All right. So I pulled everything moving. That's not the right list. Save, reload. See if it'll pick it up. There we go. That's the right list. I go pull everything moving $2 or more up in the market, put it on the gainers list, $2 or more down in the market, put it on the decliners list. There's not many stocks on here today, but look at this. Uniforms, Cintas. These make uniforms. We're in the resistance. If that closes above that 618 level at 210, we have set up the move to 235 or higher. OSRH. Wow. Biotech. Danger. That one looks like it was a SPAC. That's very SPAC behavior. Sitting at the 10 to 12 area. Fell out of bed when they announced it was a biotech. Getting a little pop, but that's probably on the way down. Be careful on that one. GME. Everybody's super excited. GME announced they're going to buy Bitcoin with their $5 billion of cash reserves. That's probably what they said down here. I would be super careful on that one. Let's see what they did. Yeah. Come on. Yeah, GameStop has added Bitcoin as a treasury reserve asset, a move unanimously approved by its board, aligning with firms integrating cryptocurrencies into their financial strategies. Does it make sense? No. They're moving away from trying to sell games and into crypto, and I don't know. Sounds like trying to save the boat, but it's maybe a bounce to the 618s before we go on down the lower levels. Be careful at this point. Maybe like JT, I thought you were big on crypto. Yeah, but for GME, I don't know. Like, look at that. Adjusted the thing and the target still stays the same place. 19. Watch for that resistance and that plummet down to a lower low right there. If we get above the 30 area, potential to take it on up to 36 to 37. It's not what I call a banging opportunity. I'm not sure that, I mean, look at the history of this thing. We get hype, we get a big drop. We get hype, we get a big drop. We get a hype, big drop, hype, big drop, hype, big drop, hype. You see the trend here. Hype, real nice hype, big drop, hype, big drop, hype, big drop, hype. Reoccurring theme here. This is probably eventually coming back down. They don't, like, what do they do to make money besides buy Bitcoin and hope that it goes up? Not a great strategy as far as the business goes. IONX. Now, most of the time, I don't care about what a business does. What's the staying power here? The chart pattern looks horrible. Has looked horrible for a long time. It's repeatedly horrible. Be very careful here. You can get sucked in the hype. You can make a few bucks, but be freaking careful. IONQ. Let's just go to the underlying. IONQ. Potential for this one to rally back up higher if we get through the 35 area. We could rally on up to the target, on up there around 60. 62. IONX could rally pretty. That's funny. The leveraged is more per share than the actual underlying right there. Stuck at the roadmap line. If we reject, we can and likely will go lower down to 1380. All right, ASML. I've been talking about the fact that we might drop down to the low 600s. Got the uptrend of lows. We break through that. Gonna take a quick trip down here. I don't think this can, I mean, look at this. Rejected the roadmap line, rejected the roadmap line, rejected the roadmap line, didn't even get close to the roadmap line. That's kind of an indication that we're probably going to go down here. We came up shy of the ideal target when we did this drop back here in November. I think we need one more trip down. Despite all the, everybody's got to buy chip equipment from ASML, blah, 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 blah. Be careful on that one. SAP getting a pullback, and the SAP New York did not hit the roadmap line, and I was speculating that we might actually need to do that. And I went through a whole thing yesterday about the price to sales on SAP being absolute ridiculous. That was in the 30 Minutes of Awesome. If you missed that show, I dove into the opportunity in Europe, which this is a European German company, versus the United States. In Q4 and Q4 24 and Q1 25, we saw a lot of money flowing from US opportunities into European opportunities. And it's glaringly clear on this chart right here. Money's kind of started flowing from here and flowed to Germany. But this is probably played out. We'll probably see that trend reverse. All you have to do is zoom out and look. This is not the type of stock that makes a big run. Be careful. Chasing the European trade, the Euro trade. This might, while it may still trend higher, we're probably looking at a retrace right here. All my alerts on S&P hitting on the downside. If I just had an extra day on my options yesterday, there's all the profit at all the levels I thought. Funny. Probably coming right down here. Back to 5,700. Won't surprise me one bit. We're probably going to push through that 1 hour, go test the 30-minute before we go on higher again. VRT. Was this good enough hit, or are we going to push it on down? This rejected the roadmap line. So like, man, JT, this magic, this thing's magic. Like this roadmap line, it provides support and resistance pretty firmly. Yeah, that's why I use it. It's pretty reliable. Looking for a drop on down in here. If we get that continuation, which, I mean, we're already at 83. Not a stretch here. Now, roadmap line bounce, which is what this is. We're right at the 618 level. Works the same way as it does on the upside. We get below the 618 level. We're probably going lower low. Maybe as low as 73.95. I mean, it could go even lower, 72, but stuff tends to truncate on the downside, so be careful expecting extensions on the downside. FNGA. Well, that's an interesting one. Looking at the daily there. Still got resistance up here. Tesla. Getting a little pullback. Got the daily roadmap line above us here. We're into that resistance zone. We can get on through the 618's up here, this next resistance zone. If and when we get above 310, this thing's probably going to get spicy to the upside. We see a quick move up to 380, possibly 400. What to watch? What do we watch today? Pullback. It looks like we're going to get a pullback after moving up strong. JB Hunt, still hunting for a bottom. As far as trucking, logistics, transportation, this may be hunting a bottom down in this 113 area right in here. This is just leveraged NVIDIA. NVIDIA still not found the bullish move yet. Remember, as long as we're under the daily roadmap line, these targets are still in play over here. Still got these targets in play. Now, are they log mode or not log mode? Can't say for certain. Looks good on log mode right at the moment. We found support at the first move down, retrace, second move down, found support. Back up to the roadmap line, found resistance. Now we need to hold a higher low and break through if we're going up. If we break back below this low from right here in early March, downside targets. Those achievement levels to the downside unlock. 97, 88, 73 right there. And that's the list for today. There were a couple opportunities on the daily list, but I don't know if they're that great. We can take a look. Yeah. Mark everything red. This is my tester account. So the list was BXSL, CSY, EPAC, ESNT, FTI, IP, International Paper, IYF, and RELX. So rolling up through here, marginal. That's a loser. That's break even. Break even. Not super strong. And that one's infinite, but it only has 2 trades. Nothing great. That's what that says. So not some super banging great opportunities here today on the daily setups. So that kind of says a blase opportunity here. So today may be like watching paint dry, and I'm gonna wrap it up here. My expectation for the day. Retrace, it looks like, I kind of gave you that target level on the downside. 30-minute roadmap line. Highly likely where we're going to go try and find some support right down in here. Wouldn't surprise me to go test that. That looks like what we're going to do. So watch for that. If we can hold it, probably go on to new highs over the next day or 2 or 3. If we bust through it, unlocks downside potential. So this is a big important level here. The 1 hour we're already bouncing off of, or I guess on the S&P, on the futures, we have to watch out for that level down here. That can be a support. So we may need to come down here on the futures, which would take the S&P cash index on lower. So remember, we're sitting at the hourly. It's like, which one do you believe more? Which one's the one to pay attention to more? I watch the futures because it's got more data, but this may be the story right here that we've got to come down here, test this before we can go higher. And they may, funny enough, they have a way of resolving, and the ES may hit the 1 hour, and this hits the 30 minutes, and it'd all be the same place. Hard to say. So that's what I'm watching today. Probably a pullback. Probably the bias for now. Probably see that. Sergio, you like to sell calls. Get some credit. You can probably do it right there. Close it out when we drop on further down. Now, I don't know that there's going to be any enthusiasm for this today. There's just not the economic news. It may be tomorrow and the GDP before it pushes us down there. So we may just kind of blase move around today until we get this tomorrow morning. And then we could just mess around tomorrow and then get this on Friday and then go shooting us back up. All right. It's kind of what I'm looking for. Yeah, have fun in Nigeria, everybody. That's where Laura is. And I guess I'll see you tomorrow. Same bat time, same bat channel, 9:15. Make sure you subscribe. Make sure you hit the notification thing or set it up on your phone, reminder. And I'll see you tomorrow.